Hello, oracles. Ooh, we've got some higher inflation data than expected. It's starting to weigh on the market right now. We are just about to have market open. So during this recording, I will jump into the charts and see where the market is reacting to this. Tesla right now has fallen down below that $200 level. We'll see how this holds. We have Investor Day coming up next week, and we will get into all of that along with some issues that competition is having as well. Competition is not coming, they are crumbling. We will get into all of that in just a minute. All right, the market just opened. So, looking at the charts right here, you can see it's going wild. The first hour of the day is always wild. So, it's jumping around. We're down about 2, almost 3% so far on the day. Again, the numbers came in. We're going to get into the PCE numbers that showed higher than expected inflation. Does not look good for what's going forward in the market in the near term. All right, so looking at the PCE data that just came in, we got a 5.4% year over year number. The forecast was 5.0%. Last month was 5.3%, and that was revised up. So we have a revised up number that we still climbed above that. And then when we look at the core year over year number, now the core is what the Fed can control. So there are things like energy that the Fed cannot control. And so they remove that from these numbers. So based upon the things that the Fed can control, we came in at a 4.7% on a forecast of 4.3%. Now, again, last month was a 4.6% revised up, and we were still above that. And then when we look at month over month core numbers, the forecast was 0.4%. We came in at a 0.6%. Last month was a 0.4%, again revised up. And so, what does this all mean? This means that inflation is stickier, just as the Fed has been saying it is. So, when we look back at the numbers, they all got revised last year. And towards the end of the year, we saw what seemed like some disinflationary pressure coming in, and it wasn't as much as we thought. It is still coming down, so the inflation was still moving in the right direction as far as CPI and PPI go, but now PCE is starting to tick back up again. This is something the Fed does not want. This is why they've been so hawkish in saying that they need to stay on top of these rates and they're not going to be pivoting anytime soon. As we discussed the other day, the market right now is anticipating another 3 25 basis point hikes, which will get the rates up to 5.25 to 5.5%. That is all the way until June. Now, of course, we still have to track all of this data. Now, this morning we did hear from Cleveland Fed President Loretta Mester stating that they are anticipating, and a lot of people are anticipating, a mild recession. It's trying to get this soft landing, might not be as soft as we want it to be, but we will most likely get there. There's a lot of economists, but there's so many unknown factors out there. And right now, what's happening is we've got a very strong labor market, despite the fact that we have this inflation. So they want to make sure they stay on top of this, and they don't want to force a recession to happen. But as she had stated, looking at the data, she's forecasted for lower than average GDP, and any little tweaks along the way that can happen with higher energy costs, other things coming out as well, could cause that to go into a negative, which is technically going to be a recession. A technical recession, until the government decided to change the definition, was 2 quarters in a row of negative GDP. So, looking at that going forward, that is something we could potentially be hitting in this year. My guess was it was going to be Q2 and Q3. As she had stated, many of the companies that are out there right now, despite the fact that they feel like this recession may be coming on, when it comes to hiring, they don't think the recession is going to be long lasting. So they want to make sure that they have the right bodies in place so that when we do come out of this recession, they can hit the ground running as well. We have been seeing this going on with Tesla themselves. Tesla has, positioned themselves extremely well to handle whatever we go into going forward. So we know that Elon has stated previously he's anticipating what could be a deep recession. We truly don't know, but he is preparing for that. And in doing so, they got themselves a nice big credit line. They've got themselves a giant pile of cash that they're sitting on, and they're doing whatever they can to have this cash flow generation coming in. They're playing with vehicle prices to make sure that they've got all their vehicles moving out there. We've got competition like GM right now, who is shutting down a plant in Indiana because they have inventory building up for EVs that they cannot move. They are not moving their vehicles like Tesla is. They're not moving vehicles out as fast as they are producing them. So again, when we start looking at people saying that there's demand issues for Tesla, It's across the board that there's just demand issues for all automotive and everything just because of the fact that we have some uncertain economic times going on. We've got consumer debt that is creeping up to an all time high. We do have savings for these consumers still creeping up, but we also have to remember that the debt that they are taking on right now is extremely expensive debt. The more the Fed goes up on these rates, the more expensive that debt is going to be. This is why there's been so many warnings out there about not going into margin when it comes to your portfolio, about making sure that you stay out of debt, get rid of any debt that you possibly can, because all of it is going to be expensive. So you want to make sure that cash is king in your portfolio right now. And so here we've got Sawyer Merritt tweeting out the article from Reuters. News: General Motors said on Thursday it will halt production at its Fort Wayne assembly truck plant in Indiana for 2 weeks from March 27th as inventory starts to outweigh demand with the easing of supply chain snags. And just to clarify, GM taking down their factory for 2 weeks due to overproduction and too little demand is much different than Tesla taking down their factory for 2 weeks for upgrades so that they can produce more at a lower cost. And so, based upon this article, sounds like their production is picking back up from where it was when supply chain issues were hitting them, but now they don't have the demand for people coming in to purchase those vehicles. So, as of right now, it seems like GM does not have any demand for their trucks. Now, these aren't EV trucks, these are their regular ICE trucks, but they don't have the demand that they need right now for all of the production. We've got Ford that is no longer producing their F 150 Lightning due to their battery issues. We've got Rivian, who maybe this is going to help them out because they are in some rough times right now as well. As a startup going into a rough economic time like a recession, it's not going to be easy. Tesla went through it back in the 2008, 2009 recession. It was difficult. And then we've got the Cybertruck coming out. So maybe people are awaiting that to see if they're going to be picking up the Cybertruck. Again, lots of unknowns there, but this is just showing what the actual true market is looking like, especially when it comes to trucks. And everybody's saying that this delay on the Cybertruck is going to be the nail in the coffin for Tesla. But it looks like right now, Tesla being, not first to the game is going to be doing just fine. And then we go over to other competition like Lucid, and Gary Black tweeting out, Lucid is down 8% after hours, missed on Q4 deliveries and revenues, and gave weak fiscal year 23 product and guidance, 24% short interest. And this is part of the reason why we may have been seeing Lucid running up, because that's high short interest. So deliveries for Q4 at 1,932 versus an estimated 2,831. The revenues came in at 258 million versus 315 million estimated. Their EPS came in at negative 28 cents versus negative 40 cents estimated. Their reservations are 28,000 as of February 21st versus 34,000 as of November 7th of last year. So they want these reservations to be going up, and they are not. And so their production forecast for 2023 is 10 to 14,000 versus 19.3 thousand, which is estimated. And as Gary Black says here, listening to Peter Rawlinson on the Lucid earnings call is like listening to the tour guide on an ocean liner about to hit an iceberg. And for you guys who don't know, Peter Rawlinson, the CEO of Lucid, has this sultry English accent that just is very soothing to listen to. But when he's giving you information that's kind of dire like this, that's exactly what Gary's alluding to right now, is the fact that if you were on the Titanic and they were giving you a sweet tour of this is what's going on, but you're about to hit an iceberg, that's literally what was going on here in their earnings call. And so while we've got competition out there struggling to get by with all sorts of different issues that they're dealing with, we've got Tesla coming out announcing that they have put their engineering headquarters in Palo Alto, in the former headquarters of Hewlett-Packard. So Tesla tweets out here to clarify, our global headquarters remain in Austin. Our engineering headquarters in Palo Alto will serve as the main location for Tesla engineering. So this means the engineering is going to be heavily based out of California, and we've got the production and everything else and the main headquarters down in Austin. So this is actually really good. So something that I had picked up on, and many others did on Twitter as well, is Elon Musk was sharing the stage with Gavin Newsom. He is the governor of California. Now, what's great about this is California is very left. They're very much on the left side. And of course, many of us know full well, going back just a couple of months with tweets and all the Twitter drama that was going on with Elon and, saying, hey, he's siding with the right. Why is Elon so right wing now? Well, Elon now is having these conversations with somebody who is extremely on the left side of things in a state that is very much on the left side of things. So you have to go back and remember that when Elon stated what he was doing with Twitter is when he is pissing off people equally on the extreme right and the extreme left, he knows he is doing the right thing. He is actually centrist. He is in the middle. And so this is kind of what he's doing is he's working with both sides because it's important to do just that. And so now he is showing this. So when it comes to all of the political drama that's going on, this is actually a very good thing. So when we can talk about a Twitter overhang, if we can still say it's there, this I think is starting to clear some of that up. And so now they've got engineering headquarters in a very left state, and they've got their headquarters for global operations in a very right state. So I hate going with a left and right thing, but unfortunately, that's kind of where we're at here in the United States. And Elon and Tesla are working with both of them equally. And I think this is going to bode very well for them, especially as we go down the road. Now we go back a few months when I was talking about Elon taking over Twitter and what I think his 4D chess moves were for this. I think it's going to come down to FSD and regulations because you need regulatory approval on a nationwide basis to be able to have this fully operational everywhere. Some states allow it, some don't. So by Elon coming out here and working with both parties on this whole entire operation and kind of getting this groundwork set over on Twitter, I think this is paving the way for potential regulatory approval of FSD when we do get to that point. Let's say we get to FSD being solved come mid 2024. Maybe next week at Investor Day, they unveil the robo taxi. Maybe that's the vehicle that there was rumored to be unveiled. If that is the case, and this Gen 3 platform, I think, could be for the robotaxi and for that cyber van. If that's the case, then we know that it is coming down the road. Elon said previously that we're looking at having the robotaxi in production in 2024. So, if that's the case and they have it in 2024, we're going to need regulatory approval to be able to put these on the road and actually make some money on these. Elon laying the groundwork right now on the political forefront to be able to make this happen is vital. So that's my take on it. We'll see, obviously, as time goes on as to how this is going to play out. But I think this is what's going to end up happening. And I think he's doing a very good job of this. And I think a lot of people and their assumptions, because they don't know all of the information, just spool up a bunch of different ideas in their head. It's human nature. That's what happens. But because we don't have all of the facts that are out there, people just thought the worst of everything. So now we're starting to get some more information and facts out of this, and the path is starting to become a little bit clearer. That's my take on it, and you guys can let me know in the comments below what you think. But I have a feeling this is going to pave the way for FSD and robotaxis, and that might actually be the vehicle that we get unveiled at Investor Day if that is the case. And now, as some of you did see, when Tesla had their video for the engineering headquarters celebration, they showed some of this, and they showed some pictures of what looked like what could be a compact car. And some of these designs are actually ones that we had seen leaked previously out on the internet. So Drive Tesla Canada asked the question, did Tesla reveal the design of its next model compact car in engineering headquarter video? And so whether we actually hear about that at Investor Day or not has yet to be seen, but this now here shows us they are working on it. Elon has said before that they are working on it. This was never a question. It's just a matter of how far into that design were they, when is it actually going to get released. I have a feeling this is one of those things that's very much under wraps, just because of the fact that if they do announce this, that's going to be the big game changer. That's going to hit a much larger total addressable market for Tesla. And that there they want to make sure that they have all the supplies and production ready to be able to pump out all the vehicles needed to meet that demand. All right, and one last jump into the charts before we get off. We are down under 195, down about 3.5%, kind of expected based upon the information we got from the PCE data. And looking over here at that SQQQ play that I had made. Now, I bought 5 shares, I sold 4 because I just wanted to keep 1 just to see how it is. It's a learning thing for me. But based upon the information I had seen, looking at the charts, looked like we were about to bounce and go back up. And sure enough, here we are up 5% on the day to day alone. And I bought mine at just over $34 a share. So I'm up nicely on the 1 share I have left. But again, not big dollars. I'm just doing this as a test. but it seems like what I had assumed was going to happen is happening. So we will see how today plays out as the inflation data gets digested and as we see what's going on with more information for Investor Day. So again, it's going to be, I think, a wild time still. We're in a very volatile market. I think we are going to be this way for the next year. I think it's going to present some great buying opportunities, and we will just have to wait and see if this is going to cause that pullback that I've been anticipating, or if Investor Day is going to pump us and we're going to break through that $214 level. We will have to wait and see. On a side note, I did do my weigh in today. It is Friday, so I am down 2 pounds. So, for those of you guys who are following me over on Patreon and my other social media platforms, you will get that information later as well. I will be updating everybody on a weekly basis over there. And Patreon, I've been doing a lot more information. Those of you guys who are patrons can see that. Like, I'm putting a lot of more content over there on Patreon right now. I've added a whole other tier as well at the $1 level. So there's both $1 and $4. Lots of different things that I'm adding to that as well. So lots of more information. I'm focusing more energy and attention over on Patreon. So if you guys are interested, you can check that out there. The link is in the description below. Otherwise, thank you guys so much for watching. I appreciate all of your support. Enjoy your weekend. I'm going to try and get another video out. I have a very busy schedule going on this weekend right before I go back to work on Monday. So I will do my best to get some more information to you. Obviously, if something important and breaking falls, I will get something out to you for sure. So otherwise, enjoy your weekend and we will see you later.